Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management, joins us. Finally, a little bit of a pause in this rally, Doug. But we'll talk about some of the headlines that we did see today. Let's talk about housing in a moment. There was a lot of 5-month stretches that were, either 5-month highs or the highest in the last 5 months. Consumer confidence, it surged in most since early 2021 in this case. So what about the American consumer? Let's start there. We'll talk about housing after that. What's the state of the consumer?
Sure. Yes, the consumer sentiment index came out, and it was it basically surged, to use the words we like to use in the media, surging and much. It's like the highest jump it's had in years, and a 5-month high, as you mentioned. But what's saying is that the consumer is stronger than expected. And part of that has to do with their home values have gone up, the market has gone up, their outlook for the economy, inflation, all those things are looking better for them. And so they're planning on spending big over the next 6 months. And that's basically what we're taking from that. So that's a good sign from what the consumer is feeling. They're thinking good things about business and their own personal situation.
All right, you talk about personal situation. A lot of that is tied to housing, or some of it, and the way you feel about your situation. We had home sales numbers going up in November after, again, 5 months of declines. The mortgage applications came out today as well, and the mortgage applications headline is that they fell despite declining mortgage rates. I think the mortgage rate was a 5-month low. So the mortgage rates continue to go down. I don't know if you read anything into the applications on a weekly basis, but what about housing?
Yeah, you can't weekly because they were up last week. They're down this week. And people are anticipating, and the Fed has said we're going to lower rates. So people are saying, there's not a lot of inventory. The spring is when all the new houses come out. If rates are going to be lower, even if prices go up a little bit, I can afford that if rates are lower. So things are looking good there. So I think the industry is expecting mortgage applications to surge next year, to use the word again, and with the anticipation of that. So I don't think we read into it too much into it, but the demand didn't necessarily fall in week by week. But it's looking good for next year for that, and also maybe refinances for the people that ended up with an 8% mortgage just a couple of months ago. Now you're about 6.8%, and maybe even going lower from there.
Yeah, that's the thing. You're always thinking, should I do it now? Maybe I'll wait. It's still going to go lower. I'm sure that's going through a lot of people's minds right now. Let's go back for a moment to where we started, just for a quick comment on the market. Until I was looking, we update it every day, so getting used to saying it's up, but I hadn't realized it was 9 sessions in a row, that the Dow's up 9 sessions in a row. Today would have been 10 until it turned around. I assume that was just a little bit of a pause, but this rally's been something else. Do you think we're turning at all, or what do you make of the market?
Well, if you're out there investing and you're looking at this, and there are fundamental reasons the market moves, there are technical reasons the market moves. Fundamentally, has anything changed? No, it's improving. So that's fine. So when you have 9 days in a row, it is very normal to have a 10th where it comes down. And if you look deeper today, you'll see the chart was really good till about 2 o'clock, and then it sort of fell off a cliff. That's how you begin to look at the technical side of things. There are options that expired today, and so that kind of pushed things into hyperdrive on the way down. But we're only down about 1.5% today. But I would put this in the technical camp. It's not anything fundamental. But we talked about this before. 4,800 on the S&P is a resistance level, and we just can't get through that. Now, if we do, then maybe we go higher than there. But we bounced up against it and sort of hit some of those technicals, and then the trading kicked in and pushed it down. So,
fair enough.
But nothing worrisome.
And that the record high on the S&P at the close, just a little below that, which we almost got to yesterday, came up about 0.5% short or something. So we'll see. But it's been good lately. Just a little pullback today. Thank you, Doug. Always good to see you. Doug Flynn on that.